Hello and welcome to the Jackrabbit Club. We're going to take a look at the portfolio for the week ending Friday, July 7th. Had a good week. All in all, we picked up about another % in open profit. Although we gave it back probably last week. So, we're just staying along the trend here. And you can see based on what we have here, we picked up about $870 in the portfolio. Now looking at an open P&L of about 6,100. 8%, looking to annualize based on closed trades, looking to annualize about 21% for the year. We're already up with the open profit, we're up about 11%, so a little bit more than halfway through the year, and we're going strong. But you could see here some of the big winners: UNH, Quest, some of the healthcare names, Win, ITW, just names that we just stay long. And you can see that we're just very simply following price. In at 147, trading 187. In at 88, trading 109. So it doesn't have to really be much more complicated than that. And again, going back to what I had said in the previous video, this is really the reason I try and concentrate on these weekly trade setups. It just, for me, and I think for a lot of people, whether it's that you don't have the time or you don't have the inclination to really sit in front of the computer screen and monitor those daily swings, this is a great alternative to just get long, stay long until it tells you not to. So let's take a look at the positions, and let's go into the one account. All right. So first, let's get on to the proper. Where are we? Bear with me. There we go. The investing side. All right. BBY. Okay, BBY got in the trade back here around $50, $50.89 to be exact. Had this huge move up on earnings. We were waiting for that pullback. Sure enough, we got it. We were able to then last week go ahead and trail our stops higher. All right. And this week it looked like we had some continuation, but closed back towards the end of the range. So this could very well be a lower high forming, where now we come back and break the 54 level. And if we do, then we just manage it when we get there. But for right now, just staying long BBY, nothing really to do in that name. DGX, another one of our big winners. You could see we got in around 88, trailed stop multiple times. All right. And, this is one that I have a big win in. So human nature is going to tell me I want to take the win. All right. Just like I did with ITW. But you don't have to take it all. Okay. You take a little bit. So sometimes, if we get a nice extended run, maybe I'll take half off. But the stop here is so close, at 106. If I give back $3 out of a, $21 move, if I give back 3, I'm okay with that. So this could very well be a topping candle, almost a bearish engulfing pattern. I think we closed a little bit higher than the body, but regardless, this could very well be a reversal signal, and we then go ahead and move back lower under that 106. FedEx just continues to move higher. All right, we got in this around 204.29, now trading 218. All right, stop is still way down here. So, this is one, again, that maybe if we break the previous low, I'll look to take half off, look for it to pull back, and then maybe look to reload it. All right, it's all up to your strategy, but you have to almost let the market do what it's going to do. You're not going to control the market, and just have a strategy in place to go ahead and manage those wins. Otherwise, you could just wait for it to come all the way back down, and if it got you out at 187, then it got you out at 187. But I would venture to say that somewhere between 218 and 187, you'd find a decent spot to relay that stop in. Glowworm, I would say glowworm, I don't know why. Corning, just continues moving higher. All right, really not much to say here. We had a slight breakout 2 weeks ago. Thought we had a continuation last week. Again, sold off. This week, doji pattern. Would not be surprised to see this low broken next week. And then maybe just, maybe this is a false breakout. or maybe we just consolidate over a trend line. But for right now, stop is in place 280 or 28.34. HIG, all right, very simple breakout, just continues to move. Nowhere to really move stop yet. We've trailed it up to 48.43, and again, just let it work. Okay, there's nothing that we can do at this point. Same with ICE. All right, no real area that I can go ahead and trail these stops to, and that's one of the things that you love when the stocks, you know, take off on you, and they just continue to make new lows and new highs and new lows and new highs, and every bar is higher than the other. But it really does make it somewhat difficult to manage those stops. So this is another one similar to FedEx that maybe we come in and we break the lows. You know, maybe we take half off or something like that. But, you know, again, one of the reasons I like to trade the weekly is I automatically have small position sizes. My stops are wide, and it really kind of keeps me from over managing the trade. And if this stock pulled back to 62 or 61, you know, would it be great? Absolutely not. But, you know, if it turns back and goes to 70, then I'll be pretty happy. ITW, all right, this was one that I had an oversized position in. I had almost $7,000 in the position. So on the break below the previous week's low, I took half off, all right. I got to a more comfortable position size for me, and, you know, we'll look to see what happens. But right now, this is almost looking like a potential reversal, all right. Similar to all the other times, pullback, all right, pullback. So maybe this is the pullback, and this is maybe our next stop level here at 141. Wait on a move over 149 and see if we could add back to the position. JPM, all right, just continues to move higher after last week's breakout, all right. We're not worried about resistance levels in long-term trades. At least I'm not. I just want to let them run, and I want to manage them. And I want to get out when the stop gets hit, when the trailing stop gets hit. Now, Netflix was close. All right. When I looked at Netflix this morning, I thought we were going to be exiting the trade. And sure enough, the one reason I love using weekly stops is or closing stops, I should say, is the trade reversed on us. All right. So what originally looked like, hey, it's time to get out, you know, and if I didn't follow my process and said, you know what, I know I'm right, I'm definitely going to get out of this at Netflix. You know, maybe I got out at 144 and just to watch a reverse. So stick with the process. All right. A few bucks here or there, if your position sizes are right, is not going to be the end of the world. All right. But now all of a sudden, this looks to me like a reversal. All right. This is a hammer, hammer candle, which, you know, if we can trade above 150.73, which would be the high of that bar, that triggers a reversal to me. All right, so let's see what happens here in Netflix next week, and we'll go from there. So as of right now, we haven't done anything, right? There's no movement in stops. There's just analyze what we're doing and, you know, continue moving forward. Here is Amazon, and again, Amazon was a similar situation where the stock, you know, was trading at the lows below last week's bar, and all of a sudden today, you know, up $13, and we're back maybe to moving higher towards that $1,000 mark. So nothing to do here in Amazon. You know, again, if you want to get kind of cute with it, you can look at the actual closes instead of the wicks. All right, and if that's the case, then your stop is right here around 966. For me, a little too tight for that right now. But if the market starts rolling over, then, you know, then that's a time that we want to look to go ahead and trail those stops a little bit tighter just to get out. AVGO, similar situation. I would love for this to be a reversal candle to give me another spot to move my stop to. Right now, stop is sitting at 211 where we've moved it up. But, you know, which is basically the initial stop on this position. You see the breakout here, all right, where I bought. Obviously, I wish I was buying here, but you could see it was on my radar, and it must have been at that time I didn't have the money or didn't fit in the portfolio. Sometimes that happens, but, you know, when you look back and you know, you just know the process works, and that's the reassuring part. It's not that you have to be in every trade. You just know the process works, and you just trade the process every time, and you don't even think about it. And that's the point you really want to try and get to BRKB, Berkshire B. All right, had a couple add points. Now we're looking like maybe we want to break out. I'm thinking that, if we can finally get that move higher, I'm thinking this 166.80 area is going to be my next stop. DHR has done absolutely nothing. You can see here that it actually has a lower high in place, but I will stay long it and get paid the small yield, and that's part of the game. All right, you can maybe you really can't do anything at this point. 81.57 is this double bottom here. We trade below that, we trade below the trend line, and we're going to be out. Microsoft. All right, now Microsoft, I am going to trail my stop ups ever so slightly because of these 3 wick lows. You can see 1, 2, and 3. And what we're going to do is we're going to use that as our stop. All right, 68.12. We're going to make this one gray because it's no longer active. 68.12. All right, these 3 lows are the stop now. All right, so you're always looking for different points on the chart that you want to go ahead and trail stops to, but you want to let the chart tell you where that is. All right, so you can see that we had this slight consolidation, or this small consolidation right in here. Then we had a breakout. That was what gave us this level. Then we have a pullback and a move higher, and a pullback and a move higher. All right, so let's try and stick with the 68.12 and see if that holds on to us. RTN. All right, so here's one that we got to check now, because RTN is breaking to new highs. So what does that mean? First of all, it means we're going to trail stop. All right, and we're going to go ahead and move our stop up to these lows of the consolidation. All right, and the second thing we're going to do, because we have a new breakout, is now we're going to say, all right, can we add to the position? So for argument's sake, let's just say we're gonna risk 500, okay? And the difference between 165, let's zoom this in a little bit so it's a little bit easier to see. All right, and the difference between 165.85 and 159.50. All right, so let's say it's 166 to 159. All right, so that's $7. So let's go 500 divided by 7. That means I can have 71 shares. All right, and right now, if you look at all the accounts, I have 32 shares. All right, so this may very well be one that I can add to, but we have to look at it from a perspective of industrials. So I only have one industrial. Okay, so that's a plus. And then the other thing is going to be money, and I'm not going to show you how much money I have, but that would be the other situation. But for me, this is a great point to add. I mean, this is exactly what you want to see for add points. It's the same exact setup that you had, right? It's the same trade setup that you're always looking for. You got it. You got a small, nice, tight consolidation, which lets you add to the position. You're not increasing your risk by adding to that position. You're still sizing that position to whatever the risk that you normally would take, whether it's 1%, 0.5%, whatever the portfolio risk you want to take on that one trade is. You're still using that same risk value. All right, so with 500, you're not doubling down. All right, you're not adding risk to the trade. So essentially, for argument's sake, in my situation, or that example situation, if I really can have 70 shares, but I only have 35, well, I'm not buying another 70, I'm buying another 35. Right? I want a total of 70 shares, but this is a great add point if you want to add to the position. And again, it is the exact same setup that I always look for, and that's what triggers my adds. Okay, nothing harder. Don't have to make it more complicated. If you get your setup while you're already in it, you can look to add. UNH, all right, this is one that has run and run and run, and frankly, this is one that I think I need to tighten these stops up a little bit, and probably if we get to the point where we finally do close below the previous week's low. Now let's look at this. We have 1 week, 2 weeks, a higher low, a higher low. Now we did trade below this low, but we were back above it. Was where our close was. All right, close was higher, the close was higher, close was higher. So in this situation, I think if we trade under 185, then I'll probably look to take half off. All right, I have a nice big gain, as we said. Let's see, what do we have in gain? We have a 27% gain. Okay, so for me, that's just being prudent. Take some profits off on a nice big run. Look to reload on a pullback. Look to maybe we consolidate for a little bit. We get a bounce higher, and we could look to add. But for right now, UNH has made a huge move from this 145. We're at 185. It can obviously continue to go higher, but right now, I'm just staying long, but cognizant of the fact that maybe I take half off next week. All right, and it's that simple. And the great thing about, again, trading those weekly charts is it's not a decision you have to make today. All right, you make a decision, you stick with it, you see how it plays out for the week. Your position sizes are small, and you just continue to go with them. Win. Not much going on here. Just moving up. All right, we had a pullback. Maybe if we can turn around and reverse, maybe then 128 becomes the new stop. Now, going through the stocks to watch, I am going to add a new trade, and that trade is going to be in DHI. Okay, and we talked about this in the stocks to watch video. This is just, to me, a perfect setup. All right, it's one that you can't. It's very difficult to pass up. Now, you do have one other thing that I didn't point out is you do have this longer term trend line, and potentially, or if you redraw this as a channel, you are coming up to maybe what is known as channel resistance. So see what happens. But it's a 1.12% yield. I think it's a good opportunity to get long. So let's go through this one. All right. Again, let's say we're going to risk $500 on this trade. All right. Just maybe that's 1% of your portfolio. Maybe it's a 0.5% of your portfolio. Pick a percent. Anything under 2 is what I recommend. I like to do, somewhere in the 0.5 to 1% range. Mine's a little different because I do trade 4 accounts, so it gets really complicated, and that's why, it ranges. But let's say we're going to trade 500 or risk 500 on that trade, and we close today at 35.79, and we're going to go down to 32.51. All right, so let's go ahead and say 32. So we're going to risk from 36, rounding up, to 32. All right, so we're going to risk $4. So 500 divided by 4. That's not what I wanted. 500 divided by 4 is 125 shares. 125 times 35.79 means you got to put about $4,500 into that trade. Okay, you have a smaller portfolio, then size it to what your portfolio is. You have $100, you want to risk 100. Divide that by 4, you got 25 shares. All right, 25 times 35.79, $900. All right, you got $1 million portfolio, whatever it is. You want to risk $1,000. Divide that by 7. All right, then you got 142. So, again, 500 divided by 7, 71. That's not what I came up with before. Oh, 6. That's why. 1,000 divided by 6. 166. All right. 500 divided by 6. 83. All right. So, again, just go through the process. 83 times 35.79. That's still not the number I had before. I don't know what I did before. I'm just running through this. 36 to 32. It's $4. It's 10:15 at night. I apologize. 500 divided by 4, 125. All right. 1,000 divided by 4, 250. All right. 100 divided by 4, 25. All right. So all you're doing is you're taking what you're going to purchase it for, what your anticipated stop level is. Remember, give yourself a little cushion because you're using a weekly chart. All right. So the stock could run through your stop and still go. So you don't want to, overcommit if you're uncomfortable. So give yourself a little cushion. I usually try and do about 1%. So in this case, we're just using round numbers, say 32. So it's the purchase price minus the stop price. All right, you take that difference, which is in our case $4, and you're going to divide what you're going to risk by your portfolio. So if your portfolio is $10,000, you want to risk 1%, you're going to risk $100. If it's 100,000, you're going to risk $1,000. All right, and then you divide that number by the $4 of risk per share, and that gives you your position size. All right, down and dirty math, nothing complicated, but I am going to look to go ahead and add this to the portfolio, all right, and round out that aspect, and we're going to go ahead and add some risk on. All right, so that's it. Again, another long one, but I hope you guys enjoyed it. Any questions or comments, leave them in the comment section below, leave them in the video, email me, tweet at me, whatever you want to do. Just get in touch with me one way or another, and I'll help you out as best I can. Again, be on the lookout for the post this week on the weekly chart, and we'll see you next week. Have a great rest of the weekend. Take care.